What is the market telling me this week? Welcome to the Rutherford Report, and I'm the Angry Investor. I get angry because Wall Street tends to screw over the little guy. So I'm going to cut through the BS and show you exactly what the market is telling me. So hit that like button, subscribe to this channel, leave me a comment, because this is the place to be for the financial news that matters for your net worth. Right now I see two major risks in the market, and one is the ongoing war in Ukraine, because Putin is now threatening the Ukraine capital with a new hypersonic missile. And it seems like every day we get a ratcheting up effect of this war. And the reason why this is very concerning is many of the companies that you invest in get their revenues from all over the world. So if a wider war breaks out, there's going to be big problems. And I know I talk about this every week, but it's something that I keep an eye on. And there's one other thing that I think is very, very important if we're looking to the market to tell us where there's a problem. And right now there's not a problem, but with the new administration, there could be huge, huge problems that I think most investors don't see. That's why I'm getting this meme that I think is particularly funny with Elon and Vivek. And they're saying, this is a meme from Office Space where they come in and they fire everything. So what do you say? What do you do here? And if they're going to look at everything in government and start cutting spending, this potentially could be a big problem for the market. And the reason for this, I don't think investors quite understand how much government spending has been propping up the market. At least that's my guess based on all of the research that I've been looking at, because it seemed like this fiscal spend from the government was the only thing propping up the economy, because everyone knows that inflation has been terrible. The middle class has been decimated. If you look at earnings from things like Dollar General, the lower income bracket, they're really not able to buy. And there's all these news articles about the higher consumer trading lower and going to Walmart. And as far as I can tell, the only thing that has been holding us back from a recession, at least currently, has been this government spend. So we're going to have to keep an eye on this, because if there's a massive cut, it could change the market dynamic that has been propelling the market higher, keeping it afloat, whatever words you want to use there. So these are the two biggest risks that I see currently. But if history is any guide, I expect the market to march higher into the end of the year. Just because typically, if you study the past to predict the future, well, once the new president is elected, the market tends to go up because uncertainty is removed. And there's just that Christmas effect where it seems to go up at the end of the year. Don't ask me why, it's just that's what the averages are, so I'm going to look at history to predict the future, and that's what usually happens. And it seems to be playing out right now, because if we look at the S&P, everything is in line and going up. So all of these pundits and all of these people online calling for a recession and a market crash, well, I don't think they're looking at the data, because if I look at the data here, the market is telling me everything is great. We're in an uptrend. So until the economic data changes, I'm not too worried about it. If we look at the gold market, well, it did a little bit of a correction, and now it seems to be consolidating sideways. So I'm going to really have to see if it rolls over here, or if it consolidates or continues up. But having let's see what the year-to-date gain of 28.92% right now, that is a fantastic year for gold. And it's also been a fantastic year for Bitcoin, going up 119%. Now, when I zoom into these Bitcoin models and I look at all of the stuff, I believe that Bitcoin is going to go higher from here. Now, of course, I wouldn't be surprised if it goes down 30% from here and then marches higher, only because based on the past bull runs, we're not even close to the high. And that's got to get to at least above 120 to match the other ones. I really don't think that it's going to 500,000 or a million or any of those outrageous things that the pumpers call for. Now, of course, maybe it does, but it wouldn't surprise me if it goes a bit higher from here at some point and then crashes another 80%. Here's the thing. It always seems to follow the pattern of go up, go down, consolidate sideways, have again, and go up. So as long as the fundamentals where people believe in Bitcoin as a brand and the protocol stays intact, I believe that pattern will continue. Now, as far as the overall stock market, let's look at NVIDIA. Well, you know what? It's near all-time highs. It looks like it's consolidating sideways. We already know from their earnings the other week that they came out strong. So if the leader is holding up, I think the stock market's going to hold up. And that's just really my take on it. Now, I do want to point out this one important thing that I saw here. This is a very interesting graph where this comes from Zero Hedge, citing somewhere. I'm not exactly sure where, but my point is that the data is very interesting to look at because the respondents are expecting higher versus lower stock prices in the next 12 months. If you look at that top graph, well, we're way up in near 30, whatever that means. But what it means to me is that we're at the high end of what people are expecting. So typically, this almost looks like an outlier. And you can also see on the lower portion of the graph, the black line, that we're at one of those rare spots where people expect lower rates. And it seems like the Fed's already cutting. And the thing is, if you look at the pattern here, that's what's concerning. So in 2020, people were expecting lower rates. In 2019, they were doing it. And then we had a big market problem. During the great financial crisis down here, people were expecting lower rates and we're having a big market problem. In 2000, maybe one-ish here, just eyeballing the graph, they're expecting lower rates and we had a big problem. Now, all through the 90s, they're expecting lower rates and we didn't have a problem. So as an investor, I have to ask myself, are we setting up for the next big crash here? Or are we going through a new boom? Just like in the 90s when we had this economic boom of the internet revolution, right now we're having an AI boom. And it's very clear to me that the fundamentals are supporting this boom. So I'm expecting a boom. I'm expecting it to continue unless one of the two major threats that I talked about earlier in this video break out. So that's just where I'm at. So hit that like button, subscribe to the channel, leave me a comment, and we got to keep watching this market because if any of these things play out, it could mean big trouble for investors. But in the meantime, I'm expecting an expansion just because most people, they're not reading the data and they're expecting a crash. So until the facts change, I'm not going to change my positioning. Now we're going to have a lot of new economic data coming out in the next few weeks at the beginning of the month. So I'm going to keep a close eye on it. And all this is doing is it's presenting fantastic buying opportunities for those who know where to look. And that's why if you want to know what I'm investing in, head on over to highreturnlowrisk.com. And I've created a private membership site where I'm sharing my portfolio to show you exactly what I'm investing in. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.